everyone, it's Gift here with Coleman from Atlantic Coach Mortgage. So we have a good news to share with you. If you're looking to buy a home right now and concerned about, my God, interest is so high, what can we do to own the home in this market? So there are many options. You got to follow us on the different video. We have buy to one down earlier, but today specifically, I have a few people call me about how can assumption loan work, or what they don't understand how the assumption can be carried on. So I just have the professional lender here to explain to you the right way. So share with the view. So what is the assumption loan basically?
Absolutely. Thank you so much, Gift. So basically what we're talking about here is the ability to assume a loan from a seller of a property. So of course, interest rates have been lower in the past couple of years.
Yes.
And so a lot of people have really low interest rates locked in.
Right.
So when they're selling their home, one option, instead of you getting a new mortgage yourself and paying, a higher market interest rate, is that, again, like we said, you can assume the loan that the seller of the property actually had. Okay. This is possible for FHA loans and for VA loans.
So too, not the conventional loan, right?
Conventional loan, it is not. It is not a possibility for.
Okay, only FHA and VA. See, remember that. But one thing you're gonna find out by talking to professional agent like me, right? If you're looking to buy any property, we can find out. Okay, what is the former owner own this home under what type of loan? So for us, first of all, we're gonna find out. Second is assumable.
Absolutely.
Right. Yep. So, and then explain about how does that work. So they want that 3.5% interest rate from that person. How much money they have to put down on what is the requirement on assumption loan in this case?
Absolutely. So that ends up being that point right there is one of the biggest reasons why some people will not do an assumption loan.
Okay.
And so basically, if you think about it, the seller purchased the property at some price. They have a loan for some amount, and over time, that loan is being paid down,
right,
while the value is going up. So at some point, they have equity. That the difference is called equity.
Okay.
And when they go to sell their home, say they're selling the home for $500,000, and maybe they only owe $400,000 at this point.
Okay.
If you're assuming their loan, what you need to realize is that you are going to have to come up with that difference.
The difference from fair value market now and the loan amount that they have.
Correct.
Right?
Correct.
So if somebody owned the home for, thinking about that 10 years, so the value market is very high up. So this means they have to pay off all that money. Whatever the loan they left, that's what the next buyer can take that over as assumable.
Right. So going back to that example, $500,000 property that you're buying at $500,000. If the seller owes $400,000 and you're assuming their mortgage, you're going to have to bring $100,000 to the table for
that. Is just for the loan only.
Right.
They still have to pay for the closing costs. How about their down payment? Is that already included in the $100,000?
Yep. So okay. I would call that $100,000. That's basically what you would call your down payment.
Okay, got it. All right. Well, it's a good and bad, right? Because some people may have a lot of cash on their hand and they can shoot to do whatever they want with their money. But in the same time, if they feel like, well, I don't want to put all $100,000 cash on the table, so maybe they want to put minimum down, then they can use this program.
Absolutely.
Right.
Yep.
Yeah.
And some people will also, if maybe they have the money to put down, but they don't necessarily want to tie it all up.
Yeah.
Some people will, they'll bring the $100,000 to closing, they'll close on it.
Yeah.
And then some banks will allow for a home equity line of credit, so you can get that after you close. That's what I want to ask.
Next question, you answer that.
Yep.
So basically, when they buy with a large down payment, they automatically have the line of credit on that option?
It's not automatic, but after closing, that's one option, is that they could work with a bank that offers home equity lines and then pull some of their money back out. It's a second position loan.
Thank you so much. This is such a valuable information. Without you giving us the knowledge, we don't know. This is why you need to talk to the right person, guy. When you're looking to buy a home or thinking about buying a house, you need to look for the professional people that is work on the field. Like Coleman, he been doing this for a year and he knows all the financial expert. He's a lender. So again, consultation is not it's not charged, it's free, right? So if you're thinking about, oh, maybe what I do with this buying now this year, so just give us a call. Our contact information is here, and we also put this on YouTube video. If you have any question, just comment, follow us for the next video, and we'll see you again next video. Bye.
Later.
Hi, I'm Glenn.
Hi, I'm Gift.
If you or someone you know is looking to buy, sell, or invest in real estate here in the DC area, we want to talk to you.
Contact us, and we also are licensed in Maryland, DC, and Virginia. Would love to serve you.
Call us at 703-707-0334, or you can visit us on the web at 23homes.com.